the QT will begin at a rate of 47.5 billion per month, will increase to 95 billion after 3 months. Just for reference, most of you, but probably won't mean anything to you, but it just means that there's going to be less liquidity in debt markets and less liquidity coming into the market. Now, in the high volatility of the market with low liquidity means we get giant swings like we did today. And today, like New Trader was saying, we think a lot of what's going on today is short squeeze, or at least just short covering. And so this market's melting up. It looks like it wants 430, even on the day hitting 426. These moves are insane. And just to paint how insane they are, let me go ahead and just show this screen again. These are crazy moves today. I love them. This T-Doc play of ours came back. And then we can look at these bonds, though, and see that TNX has actually come down, which means it was probably pricing in that 70 base point increase. And so it's kind of down a bit, and TLT's having some wild swings. So even though the market looks like it's fine with these moves, it does seem like there's some confusion in the bond market. We're going to need to keep an eye on that. And the other thing that's definitely caught my eye is this movement of the dollar today. Because if we look at the dollar,
that's the other thing. I don't want to swing anything.
Huge sell-off on DXY.
It's going to be a full pull.
And so that's also really interesting. Now, one of the things I didn't like is that we never heard Powell mention the Japanese yen or a lot of the global features that could have ripple effects that hit us here in the U.S. And he did iterate, though, that there could be several things that are outside of their control that could hit the market. Although, once again, saying that he believes the labor market will continue to be strong and that inflation is their primary target. One of the interesting things I think that I thought was interesting was that he said that even if inflation numbers start to come down, it'll take more than a month for them to change their trajectory on what they want to do for the tightening market. So, which is important to keep in mind. So even if we see these numbers improve, it might be several months before they come down from these more aggressive 50 base point increases. And even when that inflation does subside, they're going to continue with 25 base point hikes. And so we'll probably also concede that quantitative tightening continue to play out. Now remember, the quantitative tightening is what most economists are more worried about. And I think the argument to be made against everything that occurred today is that the economy is definitely showing more signs of slowing than the Fed wants to admit to. And that's because they're simply saying that they can't take 1 quarter of data and a surprise to the downside as a true signal that the market is at a downturn. And they keep reiterating the jobs numbers. Excuse me. It'll take time for that to play out. But when I take a look away from economists and listen to CEOs and some of their comments, when I look at the forward guidance given by companies, some of these issues that the Fed think will go away in 9 months, we've heard a lot of even the semiconductor companies say that this will persist until 2024. So I think, we're going to need to continue to play this month over month. And I think the economy could be a lot slower than the Fed expects. And that's what's been iterated by a lot of these CEOs. Even Apple came out and said that they're expecting to have poor results in Q2. So even though this quarter's reports have looked rough, I am now got my eyes on second quarter and already expecting that to be even rougher. So even though we see this bounce in the market, and then we could see it push to 430, maybe even higher, it could get a little rational, keep pushing there. These moves to the upside tend to last longer than people expect, and the moves to the downside tend to last longer than people expect. I expect this trend to probably continue for the rest of the year. So as far as this upside move, when this is over and this subsides, I expect new lows to be made in this market, probably a touch at 4,000, and I think we'll visit the 380s or 3,800 for this summer. So that's what happened today. It was a big Fed decision. It wasn't a real big reaction. I think market's a little irrational in its decision making, but it was pretty oversold all over the place. TDAC was the big one that I was looking at for being oversold. We talked about that in the Sunday report. Anyways, this will be the end of the live stream. I hope you enjoyed. We'll have video out this Sunday. I might have another video be coming out before then. We'll see. And I hope you enjoyed this recap.